My concern with Cameco, and I expressed that in an interview that you did with me on behalf of VRIC, was their takeover of Westinghouse. It wasn't clear to me that the mining company management was capable of running an engineering firm. And the first 2 quarters financials reflected that. It turned out that they were writing down everything they could in the Westinghouse acquisition. And the last 3 quarters have been spectacular. So it would appear that this integration is going to work. And if this integration works, that's a real transformation. That's real margin if it occurs. So yes, I'm very, very bullish Cameco. I'm less bullish Kazatomprom, which I really liked 5 years ago. I'm less bullish about Kazatomprom because, for reasons unbeknownst to me, the middle managers in Cameco, who I held in extremely high regard, have left.
Kazatomprom, you mean, right?
Yes, Kazatomprom. What did I say? I'm sorry. Yes.
Cameco, yeah.
Yeah, Kazatomprom. There's been a real upheaval in middle management, and those were very, very high quality people. I'm not sure why they left. There's a lot of speculation. I don't know, so I won't speculate. What I will say is their failure to restore effective production in Kai, my Kazatomprom position, and it's gone. It was my largest uranium position, and I took the money sideways from Kazatomprom into Cameco. I suspect, given the strength in Cameco, that I wasn't the only one who made that swap. In terms of playing the U.S. game, maybe you look at Energy Fuels, which has a permitted operating processing plant and, importantly, 60 million tons of approved tailings, and has made substantial investments in rare earths processing as well as uranium processing. That's a name I own some stock in. I need to admit I'm less familiar with their technology than I should be, but a good friend of mine, Dave Wargo, is more familiar, and he's talked me into his point of view of any of the U.S.-centric producers. And I would suggest on a valuation basis, and also because the royalty and streaming business is such a good business, that people who want to play the uranium theme in the United States consider uranium resources. The best constituency in the U.S. uranium business is UEC. Amir Adnani has worked for 25 years and probably spent $100 million building a 100,000 shareholder constituency at UEC, and there's no constituency as interested in hearing good news as an existing shareholder. So that stock is extremely sensitive to sentiment about uranium. It's also a $4 billion market cap. I own it as a consequence of my fondness for Amir and the fact that I've sold enough stock that the rest of my stock is for free. I have no basis in it. And I own it because of the constituency around uranium, which I think will be fed good news and will respond to it. It isn't because my time preference has changed. It's just because being an investor for 50 years has taught me that things take time. I sincerely hope that the oil price goes below $50 a barrel. I sincerely hope that there's investor capitulation in the oil space, because although I don't need to make more money, I like to make more money. And the surest bet I know of is that peak oil demand doesn't occur in 2030 or 2032. It occurs in 2065 or 2070. What that means is that the fat tail on net present value calculations in the oil business has been discounted to zero. It's worth a lot more than zero. A lot more than zero. Now, the weakness in the oil price against flat production would seem to tell me, I'm no economist, but it would seem to tell me that we're not staring at a recession, that we're in the early stages of one. Oil is even more economically sensitive than copper, and it isn't sensitive to perception. It's reactive to reality. You will recall in the early days of the COVID event, when air traffic and automobile traffic fell off the table, that's an economic response because the stuff is cheap and it doesn't store particularly well. When you produce it, you sell it because you can't afford to store it. And I think that the oil quote that you're seeing today and the weakness, particularly in AECO, Alberta gas prices, is a function of the fact that demand for energy, which is very economically sensitive, is weaker than we expect. And it could be weaker still. I also believe that the American oil and gas industry is probably selling at half the net present value of their demonstrated cash flows from reserves and resources, and that the Canadian industry sells at a discount to the American industry. I'm a very large holder of things like Exxon, to a lesser extent Chevron and Occidental, Devon and Equitable in the U.S., and unrealistically large shareholder of a basket of Canadian oil stocks. I say unrealistically large because for them to succeed would require the leadership of Canada, who is anti-oil, to get out of the way. In other words, I'm betting against the venality of politicians. Probably a really stupid bet on my part. But they're so cheap. The Arc Energies of the world, the Freehold Royalties of the world, the Tourmalines, the Peytos, the Birchcliffs, they're so cheap that I can't not own them. At 72 years of age, I would love a no-risk, no-brainer five-bagger that paid me substantial dividends while I waited. And that's what the oil industry feels like to me if the oil equities have another price decline. There's history around this, Jesse. I remember back to the late 1980s, early 1990s, the last time that people thought that oil would never catch a bid. And a bunch of the Canadian juniors had financed themselves in the junk bond market. And the quotes on these things just fell apart. They absolutely fell apart. I remember Mark Resources, I think was the name of it, had a 5-year bond, unrated junk bond. The cover yield was 12%. Remember, this is a higher interest rate environment. And the bond was selling at 60 with 3 years left of maturity. So my running yield was 18%. My yield to maturity was more like 30%. And you could buy that bond all day long. The bond was extremely well covered by proved developed producing reserves, but the sentiment in the oil and gas space was so bad, and the sentiment in the junk bond space in the aftermath of the Drexel blow-up was so bad, that they were giving this bond away. And I would love to see a circumstance like that. I think he's a politician first. I think he's accomplished everything that he feels he can accomplish without coercion. I think his worldview now requires him to be coercive. It requires the power of the state. At Brookfield, he had to convince bankers. He had to convince customers. He had to convince shareholders. As the Prime Minister of Canada, he can coerce. If you're interested in power, coercion is much more persuasive than convincing people. He has said, you can't know what he's going to do really until he tables a budget. He's a very smart guy, so he's decided not to table a budget. He's also a very smart guy in the sense that after a decade of being the power behind the throne in the Liberal Party, he ran on a campaign of change. That irony shouldn't have been lost on anybody. And he's also lucky. Lucky's a great trait in a politician. He got to run against Trump. Now, I wasn't in Canada. I didn't see the ballot. But I don't suspect that Trump was on the ballot. But Carney was smart enough to run against the Liberals, although he was a Liberal, and run against Trump, who wasn't running against him. And the industry that Canada is most competitive in on a global basis is oil and gas. That doesn't mean Canadians aren't good bankers. They are. Or good miners. They are. But the truth is that their most globally competitive industry is the oil and gas industry. So if you take Carney at his word that Canada is going to be pragmatic and build on its strengths, if you believe that he needs the industry to be healthy so he can steal from it to fund his agenda, then you can be bullish on oil. If you look, however, at some of the other things Mr. Carney said, which is that all of his financial decisions will be predicated on carbon, you need to be much more cautious. Much more cautious. I am suspending political judgment for now, and I'm buying names in the Canadian oil and gas business because the valuations, the reserves and the resources, and the recycle ratio, the ability to discover more reserves and resources on the margins generated by existing production is so strong. So strong. I can't help myself. My greed overwhelms. Let's get that out there. Any of your listeners who are interested in Mr. Trump actually should do themselves a favor and read his book, The Art of the Deal. In The Art of the Deal, he lays out his ethos and his game plan completely. There's no discussion in The Art of the Deal that a transaction should be a win for both parties. I built my business by offering more utilities to my consumers than I charged them for it, which meant that I had returned customers for 50 years. If I made mistakes, I was given some tolerance because I added value in other places. That's not Mr. Trump's ethos. And Mr. Trump doesn't have an ideology. When he was a New York property developer, he was a Democrat because that's what you had to do to get projects built. He said himself that if he ever became a politician, he would become a politician because you could tell lies that reflected the frustrations of an audience on Fox, and they would believe the lies. He said that, and he's acted on it. Mr. Trump doesn't have an ideology particularly, and I don't mind that particularly, but he's completely transactional, which means that Mr. Trump can use them to reward his friends and punish his enemies. The reason that it's difficult to predict what he's going to do is because you aren't present in the meetings. You don't have the ability. If you go back to the old H.L. Mencken quote, that elections are advanced auctions of stolen property. That's a wonderful way, by the way, to understand politics. The difficulty that you and I have is that we don't know who the high bid is. And the high bid can change. The other thing to know is that tariffs are taxes. And from my point of view, taxes suck. Anything that benefits the state at the expense of the citizen is a bad thing. The tariffs are bad policy, but good politics. You can reward your constituency, and the rewards can be very focused, but the penalties are diffuse. They're diffused among all consumers, as an example. That doesn't mean, by the way, the fact that I dislike Mr. Trump so much. It doesn't mean that I liked Biden or Harris. I would much rather that Jesse look after Jesse's family. I don't think that assigning responsibility for your future is a wise thing to do. And people who are fond of Carney or Biden or Trump are precisely assigning responsibility for their future to people who are proven to be more on your own. And there was a wonderful headline there. It said, workers of the world, disperse. Takeoff on the old socialist slogan, workers of the world unite. Workers of the world disperse. I think that the answer in the very near term is to become as independent of the state as you can. Not independent enough that, as an example, you stop paying taxes and get thrown into jail. I mean, I'm all for stopping paying taxes if you can get away with it. But it's a very, very, very risky strategy. But I think a circumstance where you do, as an example, what you did, where you expatriate. My friend Doug Casey said 40 years ago, your assets and your passport ought to have 3 different locales. I haven't followed that, but I have legally exported a lot of my capital, as an example. And I've organized a lot of my investment portfolio in an insurance company where, because I don't dividend it and I don't salary it, and I use realistic as opposed to industry standards loss reserves, I minimize the tax I pay. And I think people need to do that. I think in particular, however, Jesse, that people need to look at what the next 10 years is going to bring them. I believe that the US dollar will lose 75% of its purchasing power over the next 10 years, the same way that it lost 75% of its purchasing power in the decade of the 1970s. And what that means is that people who are my age, who haven't been as lucky as I have, people who are relying on Medicare, Medicaid, and Social Security to fund their retirement, have to rethink it. The nominal level of benefits that you get today will continue, but they'll inflate away the net present value of those benefits. So if you're getting $4,000 a month on Social Security, or whatever the number is, you're going to keep getting it. But 4 years from now, or pardon me, 10 years from now, that $4,000 is going to buy you $800 or $1,000 worth of goods and services. I think it's important that people understand that. I think it's important that people your age need to understand that my generation voted ourselves all kinds of cool benefits, but we forgot to pay for them. So you all get the bill. And I think that realization will probably, over time, do a very good job of reducing the aura of legitimacy the government enjoys today. But it's going to take a while. You remember that it took the decade of the 70s that constrained the growth of government all the way through the first 4 years of the Clinton administration. The realization through the decade of the 70s that government was evil is something that constrained the growth of government for 12 years, beginning 1980. And that allowed the private economy to grow fast enough to refloat the state. And I suspect that's what happens this time. I suspect that we have a 10-year reckoning, which will damage substantially the perception of government, that will have the same sort of economic reckoning coming out of this next 10 years, that will reduce the importance of the state and re-allow private initiative in the same manner that private initiative was allowed in the decade of the 80s and the early part of the decade of the 90s.